Joining me now is Portfolio Wealth Advisors President and Chief Investment Officer Lee Munson. Lee, great to see you. Thanks so much for being here. How would you assess the earnings period so far?
You know, so far it's doing well. We still have a beat and raise situation. It's going to be, I can't wait to see Alphabet and see what Google has later today. But I think that the issue that we're having right now is that this market, especially in the AI trade, is simply based on beating expectations and raising guidance. And what I'm very concerned about is when exactly are we going to get the canary in the coal mine? We've had this little, sideline with tech and memory selling off a little bit. But, when you look at those Chinese internet names, I feel they're that canary in the coal mine saying, hey, if we don't get profitability, these valuations are going to start coming in and we could get an actual major sell-off. Do I think that's going to happen in the U.S. between now and the end of the year? I'm not so convinced. But I think if you look to the east, you can kind of see a potential future 6 to 12 months from now, especially if companies like Micron or SK Hynix, say, hey, we beat, but we're not exactly going to raise. And if some of these data center projects get sidelined or delayed, I think it could cause problems in the AI trade.
Yeah, one of the focuses today, of course, the price of oil, which is inching closer to $90 a barrel. Take a look at the price of oil. The U.S. struck Iran for an 11th consecutive night last night in retaliation for killing U.S. service members in Jordan over the weekend. The price of light sweet crude at $87.14 a barrel. The Pentagon released a photo of the fourth U.S. service member killed overseas. Sergeant Angel Rampersad is thought to have been killed Saturday when Iran attacked a U.S. base in Jordan. President Trump is vowing to hit any site where Iran is thinking about nuclear development. Lee, what are your thoughts on the war and the price of oil?
Well, I think that the only people that really care about the price of oil right now is bond markets. You can see the 30-year continue seeing that yield rise. In fact, it's getting near where I'm actually a buyer of the 30-year. I think what the issue is that the stock market doesn't seem to care about the price of oil. I think that this is going to be a new reality going into the fall. For 2 years, Maria, we've been so concerned about consumer inflation, and I think that tune is going to start changing, and we might see next quarter we start seeing production get hit by oil, and that's a whole new ball game, because so far, all year, everybody on Wall Street, we've all been saying oil isn't affecting earnings. But with this type of resurgence, if we see this persistent 90, 95, maybe 100 a barrel going through, the summer months, you're going to start seeing industrials. You're going to start seeing it in other places. And that's what we want to avoid.
Yeah, jump in here. Adam Johnson, your thoughts on this trade on industrials versus big tech. Once again, every day it's a different story with semiconductors, it seems.
Yeah, I know. And we can thank the algorithms for the flip-flopping, because they're trying to catch all these moves up and down. I think what you have to do is focus on the long term, and I think that's what Lee is talking about. If you're focused on companies that are generating profits, not just in one given quarter, but consistently over time, expanding their margins, running their businesses responsibly with a long-term view, what you see is that these companies go up, and when they go down, they get bought. Lee mentioned Micron. Micron's now trading at 7 times earnings. That's a buy. There are so many stocks right now that are so cheap, cheaper than the S&P 500. Microsoft and Meta are others. These are companies that are running their businesses very wisely, and so I'm very comfortable owning companies like that.
Yeah, it's incredible that it's trading at 7 times earnings. Let's check interest rates here. Treasury Secretary Scott Bessent was with me here yesterday with an economic outlook as inflation cools in June. I'd like to get your reaction to this, Lee. Here's the Treasury Secretary here with me yesterday. Watch. What would be your expectation for growth in the second half of the year, Secretary?
I'm not going to give a guess, but I think that 3% is minimum, not unreasonable, and I think we can start coming back towards the Fed's target level. I think PCE inflation versus CPI inflation. PCE has some quirky things in it where, like the stock market goes up, and because of portfolio management costs, the costs are going up. I think those are going to be adjusted this year. Yeah. So I think inflation's under control.
Your thoughts, Lee, in terms of 3% growth second half of the year?
Oh, I totally agree. I think it's completely possible.
Yep.
In fact, that's why you're seeing a broadening out of the market here.
Okay.
large cap value is beating the S&P and the NASDAQ because we're getting productivity increases from all of that AI
big productivity boom. You're absolutely right. Let me get to Cheryl right now. AT&T earnings have just crossed the tape. Cheryl has the numbers.
Maria, strong quarter for AT&T. They beat on earnings per share. They came in at 65 cents adjusted. That's a 20% year-over-year gain. The street was looking for 59 cents. A slight miss on revenue. They came in at $31.6 billion. The street was looking for 31.8. But they reiterated full year 2026 and multi-year guidance. They also accelerated their plans for share repurchases for the years for this year, 2026. Also, a couple of things here. They added more than 1 million advanced connectivity subscribers, fiber, fixed wireless, and when it comes to postpaid phones, they handily beat street estimates. The street was looking for 338,000 ads in postpaid phone net ads. They came in at 432,000. So again, $45 billion they're planning to return to shareholders over the next 2 years. They're accelerating that plan this year, and the company also really looking strong in fiber. One thing I do want to add here, the statement coming in from John Stankey, AT&T chairman and CEO. He said the accelerated growth we delivered in the quarter shows structural advantages to lead the next era of connectivity. And again, we are accelerating the pace of our planned share repurchases this year to $10 billion. Of course, Maria, you're going to be having him joining you on the program momentarily. Back over to you.
Yeah, I mean, it looks like the investments that AT&T has been making in the last decade have definitely played out here in a positive way. That is in fiber and broadband. AT&T Chairman and CEO John Stankey will be my special guest coming up, giving us the latest on the company's second quarter earnings. So don't miss that. Stock is up almost 6% right now in the pre-market. Thank you, Cheryl. Lee Munson, thank you so much. Great to see you. We will see you soon. We're going to take a break. When we come back, AI Week is back on Mornings with Maria.